I'm here at the Future of Retail Banking 2015 and I'm excited to ask Richard McCarthy, partner at KPMG, a few questions. So Richard, Thank you very much for agreeing to answer a few questions. The first one would be great to get your view on what have the key messages from today's event been.
Okay, so the big banks know they have to change. They are all completely committed to customer integrity, put in whatever big nice words that you like. Those that have gone hardest at this journey around trust, clearly concerns came through about when this was going to produce the financial result that is needed. I thought we had some very interesting presentations in the afternoon that talked about how customers perceive a bank and how that's related to what they're expecting. So quite a few of the banks have been going out saying, trust me, we'll have integrity, we're always thinking about you. But of course, if you haven't got the systems to actually produce the results of that, then that's going to be a problem.
So, casting your mind back maybe over the last sort of 5 to 10 years, what do you think is different about the way that bankers are talking now vis-a-vis, maybe 5 or 10 years ago?
Okay, so if you go way back, banks were certainly not customer friendly at all, because if they didn't know your father, your mother and your grandfather, they might not even give you a mortgage, right? And it was kind of like, we will decide when we think paternally you should do something. And then there was a freeing up, allowing people to have more autonomy. And then the banks realized that they could produce different products, different services. And so far it sounds pretty good, right? But then it started to morph into something that wasn't dangerous from day one, but became dangerous when it was around let's sell more product. And at some point it clicked over and we forgot what the whole purpose was, which is to actually help people's lives be better.
So if we just think about the regulatory horizon at the moment, we had a few comments today about the CMA inquiry, that kind of thing. If we have a think, what is on the regulatory horizon? What do you think that banks should be aware of and looking at?
Okay, so let's start with the CMA. The report is in two pieces. The first half is very well researched, universally regarded as filleting out the key issues, which is that there is an issue, broadly speaking, in competition. And the second half, I suppose, to be honest, has in some circles been regarded as a bit of a damp squib. And when I was chairing another conference, something that came through, because we had the CMA there, I guess, is that they've only begun their work on what the remedies should be, what we should do about this. And what you think the remedies should be really depend on who you are. So the very big banks, I think, are open to the fact that there should be customer choice, but they certainly don't want to be broken up or forced to have a lot of costs to tell everyone what theoretically different services cost. And then if you go to the really cheeky challengers, the small guys or the fintech, they're going like, we're not worried about all this. We're gonna go and show the customer why what we've got is better.